Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. As we come into the final week of October, this is going to be one of the most critical weeks of the year. We're 1 week away from the election. This will be the final snapshot that voters are going to see. A lot of folks have already voted on early voting, but there's still plenty to vote this time. In fact, there's likely to be a record turnout this year. As we look at what's coming out this week, a number of housing numbers coming out, but the key numbers that we'll see from an economic viewpoint will be on Thursday. We have the release of GDP. The expectations for that number are all over the board. The consensus is around a -30. It'll be interesting to see how that comes out, because I think it's going to be a real easy number to beat. Even if it comes in better than expected, I'm not sure it'll even be bullish just because of the negativity around that number. One of the key elements on Thursday will be the claims and the continuing claims, as they have been every week for market sentiment. But this week they might be more impactful because a lot of folks are going to be watching these numbers closely. It will be a focal point for the media as they're talking about how many people are out of work. The expectation for the claims are that they will come in roughly about 750,000 new, but the continuing claims, as I've been talking about, dropped well below that 10 million number, coming in at 8.37 last week. This number continues to drop and comes in under 8 million this week. That will be a positive, but with everything that's going on in the marketplace, I'm not sure it will actually be bullish, even though it will be viewed as a positive event. Also, over the next couple months, I'm expecting to see that continuing claims number drop well under 6 million. So this is going to be a continued focus of market participants. The other events that will be happening this week is that there's over 1,000 earnings reports coming out. The bulk of them will be out on Wednesday and Thursday. There's about 650 reports, but every day is going to be impactful as we go through this week, as there's some substantial companies reporting this week. The final thing I mentioned, remember the stimulus deal? Well, no one's talking about it this weekend. Not like last weekend. It seemed to be a focus. As I've been saying, this has been nothing more than posturing on both sides of the equation. They're not going to do a deal. They won't give Trump a win before the election, so that's just not going to happen. Because of the hype around it, we're finally starting to see that affect the momentum in the markets and market sentiment. I'm seeing a substantial amount of weakening in our intermediate database, also in the momentum that is supplying the support for the markets. That's starting to dissipate very quickly. Let's take a look at the charts and see how this week is setting up. As I review the WaveTech database, there's a fair amount of selling coming in, as 650 sell signals on the intermediate models, pushing the percent bullish down to 63 from 65. But it's starting to show some substantial rotation coming in, and we're likely to see this thing continue to move lower, especially if this coming Friday's close is lower than last Friday. We're going to see further negative rotation in the database on the intermediate models. Looking at the daily models, we did see some positive rotation there. There were 300 buys and about 150 sells, so a net positive, as the bullish percent uptick to 36.08%, but it still remains under that critical 42% bullish that would signal a move to the upside. So this is telling us that we're going to continue in this sideways range that we've been in. There's still plenty of potential for the market to fail. See this short-term database move back into around 28-24% bullish. As I review the daily S&P futures, We are seeing some weakness overnight with the market down 22 handles right now. The low has been 34.25. S3 is 34.21 and the STX is 34.12. So we're likely to see this thing continue down toward the extreme, but the number to watch for is 33.95. A break below that level will signal a further decline. PPM1 is now at a negative 0.30, which is in downtrend mode. There's only a 30% probability for the futures to rise above 34.54. That will be your key point to sell off of if there's any rallies up to that level. But everything is starting to roll over. We're seeing a lot of negative rotation here. One of the features as we look at the weekly S&P futures, we're seeing the 10-period moving average flattening off substantially and beginning to start to roll over. If we close below 33.98 on a daily basis, that will signal a move to go down toward the 21-week moving average, which is 32.88. There's some more defined numbers that I'll bring up in the cash markets. As we look at the weekly cash S&P, the key number is going to be the 10-week moving average, 34.06. Last week we saw a low at 34.15. This week, S2 is 34.11, just below that level, and then S3 is 33.82, and the STX number is 33.57. Just like in the futures, it looks like we want to move toward that 21-week moving average. That's likely to happen over the next 2 weeks. Could happen this week if we trade below that 10-week moving average that's at that 34.06 level. Key resistance number is going to be will be R1 at 34.62. The key resistance today will be R1 at 34.73. I don't see us getting above that level as the 10-period moving average comes in right at that same level. The expectation will be a move toward the 34.39 to 34.31 level, which is the STX number for today. Next market that I'll cover is the NASDAQ. The NASDAQ is down 50 handles overnight, down 0.42. We are trading below the 21-day moving average right now, 11,628. The last is 11,613. If we look at the market grid, I would look toward an S2 number today, 11,572 on the downside. The pattern also suggests that we could trade down as low as the 40-day moving average, which is at 11,498. That would be just about to an STX or an extreme low for the day. So the range for today is most likely going to be R1 S2. We've already printed S2 overnight. If we get through that level, then we could expand that to S3. Next market I'll cover is the Dow. The Dow is trading higher overnight. It should continue toward the 10-day moving average, which is currently at the 94.06 number. Looking at the market grid, the R3 is 94.09. So far, the high's been 93.03. If we get above the R3 number, then expect it to go up to the 94.20 level. On the downside, the S1 92.60 is likely to be the extreme for today. So S1, R2 for the Dow for the day. The final market I'll cover tonight is gold. Gold is continuing to be under pressure, trading down into the lower end of the range that it's been in for the last 5 weeks. The weekly chart continues to suggest that there's good solid support here at the 1897 level. We're trading right at that level right now at 1896.60. The low has been 92, and that is also the S1 number on the grid for the weekly charts. So if S1 can hold, so far that's the low overnight. Look for an S1 R1 number this week. We're starting to see this contraction. I've talked about this over the last 2 weeks on the weekly charts of the gold. We've been locked between the 21 and 10-week moving averages. That number is getting very narrow at this time, and it looks like if we're going to break out, we could break out to the upside, but this will be all based upon the Dow staying under the 94.30 level. If the Dow goes over 94.30, that will probably signal a further move. We could go as low as S2 on this weekly chart at 1879.20. As we look at the daily gold chart, S2 on the daily is 1891. We've been 92.50, so S2 R1 is likely to be the high. I don't expect that we'll trade down to S3, which would be 1884, but that's certainly possible, especially if the Dow continues to stay strong throughout the session. This will complete tonight's video. We'll talk to you tomorrow night.